The AI revolution is undeniably reshaping every industry, driving unprecedented demand for intelligent solutions and the infrastructure to support them. But while titans like NVIDIA capture headlines, the true hunt for alpha often leads savvy investors to less obvious, yet equally compelling opportunities. Today, we're diving deep into 7 under $5 AI stocks that are quietly building powerful competitive advantages, attracting institutional interest, and positioning themselves for substantial growth in this rapidly expanding sector. Let's dive in. First up, let's talk about Wolfspeed, Incorporated, ticker WOLF. This isn't just another chip maker. Wolfspeed is a leader in silicon carbide, or SiC technology, a foundational material for the high-performance semiconductors essential for AI. The company recently announced the commercial release of its 200mm silicon carbide material, a significant leap designed to power and cool the massive data centers running AI applications more efficiently. This strategic pivot to a pure-play 200mm SiC footprint, including the closure of older fabs, aims to drastically improve manufacturing efficiency and reduce costs, targeting an impressive $3 billion in annual revenue from its new factories, while navigating a Chapter 11 reorganization, which will slash debt by 70%. Current shareholders face dilution. However, Wolfspeed has secured substantial funding, including up to $750 million from the CHIPS Act, bolstering its liquidity and long-term strategic initiatives. For investors, Wolfspeed represents a critical infrastructure play for the AI future, focusing on superior energy efficiency and performance that modern AI demands. Next, we have Blaze Holdings, Incorporated, ticker BZAI. Blaze specializes in programmable AI platforms, bringing intelligence closer to where data is generated, rather than relying solely on the cloud. This is critical for applications like smart cities, industrial automation, and public safety where real-time processing and energy efficiency are paramount. The company recently announced a strategic partnership with technology control company to advance Saudi Arabia's digital transformation, focusing on hybrid AI infrastructure. This builds on a substantial $120 million agreement with Starshine Computing Power Technology to deploy its hybrid AI platform across Asia, and a $56 million purchase order for intelligent surveillance endpoints in Southeast Asia. Blaze reported a robust 97% quarter-over-quarter revenue increase in Q2 '25, exceeding guidance. Despite recent stock volatility, analysts maintain a strong buy rating, with a significant average price target, signaling considerable upside potential as the company transitions from technology validation to market execution. Our third pick is Agora, Incorporated, ticker API, a company empowering real-time engagement with AI. Agora provides a sophisticated real-time engagement platform, integrating conversational AI, video, voice, and chat directly into applications. Imagine highly immersive AR and AI video capabilities for broadcasters and media. That's where Agora shines, thanks to its partnership with Banuba. The company's focus on conversational AI interfaces makes applications more intuitive and user-friendly, crucial for everything from call centers to AI-powered companion toys. Agora has achieved a remarkable turnaround, delivering its third consecutive quarter of profitability in Q2 2025, driven by expanding gross margins and double-digit organic growth in its core segment. With strategic integrations, including support for OpenAI's real-time API and a partnership with Wiz.ai for enterprise-grade AI agent solutions, Agora is leveraging its strong cash reserves to fuel AI innovation and actively repurchase shares, positioning itself as a compelling AI play in the interactive experience market. Before we move on further, what if your trading platform could do more than just execute orders? What if it could give you the deep dive tools you need to truly understand the market? With Moomoo, you get a platform built for serious traders. Forget bouncing between sites for insights. The Moomoo community connects you with over 26 million users to share strategies and trending stocks. Want to track the smart money? The Institutional Tracker lets you explore how top institutions, like Berkshire Hathaway, allocate their holdings across different sectors and specific stocks. And for true transparency, Moomoo offers exclusive data like insider trades. You get transparent access to insider holdings and trades, so you can see who's buying or selling, their position, and even the transaction price. When it comes to execution, Moomoo offers powerful tools like conditional and algo orders, which can auto-place a market or limit order when a specific price is reached. This is trading at the next level. The best part? Moomoo offers zero commission on stocks, options, and ETFs. Open a funded account, and new US users can get up to $1,000 in NVDA shares with a qualifying deposit. Again, huge thanks to Moomoo.com for sponsoring this video. And now, back to the content. Moving on, we have Wipro Limited, ticker WIT, an Indian IT powerhouse with a significant footprint in AI and cybersecurity. Wipro leverages AI and machine learning to develop custom solutions across diverse industries, from financial services to healthcare. A key strategic move is its expanded partnership with CrowdStrike, launching Wipro CyberShield, an AI-powered unified managed security service designed to simplify and strengthen enterprise security. This service, powered by CrowdStrike Falcon Next-Gen Security Information and Event Management, promises enhanced visibility and AI-driven automation for threat detection and response. Wipro's Q1 FY26 results revealed an 11% year-over-year increase in consolidated net profit, surpassing expectations, and boasts a respectable dividend yield. The company is aggressively investing in future-proof technologies like 6G, quantum computing, and distributed cloud models, further solidified by its acquisition of Harman's Digital Transformation Solutions business and a substantial £500 million deal with Phoenix Group. With a PE ratio lower than the industry average, Wipro presents a potentially undervalued opportunity in the AI services sector. Fifth on our list is TELUS International, ticker TIXT, a global provider of AI-driven digital solutions. Specializing in computer vision, data annotation, and search relevance, TELUS International supports enterprise applications across fintech, healthcare, e-commerce, and media. Their proprietary Fuel iX platform is specifically designed to help organizations manage and scale generative AI. The most impactful recent development is the definitive arrangement for its parent company, TELUS Corporation, to acquire all remaining outstanding shares for $4.50 per share, representing a significant 52% premium over the unaffected price. This proposed merger aims to enhance AI and software-as-service transformation capabilities across TELUS's broader businesses. Scotiabank, having raised its price target to $4.50, described the deal as the best possible outcome for shareholders. While a class action lawsuit alleging misleading statements regarding its AI data solutions is a point of concern, the strategic focus on AI-infused customer experience and strong operational growth provides a compelling narrative for investors seeking exposure to AI-driven customer solutions. Our sixth pick is Alight, Incorporated, ticker ALIT, a human capital technology company undergoing a significant strategic pivot. Alight is divesting its payroll and professional services to sharpen its focus on employee benefits, leveraging its work-life platform with strong emphasis on AI integration. This platform now incorporates AI-powered healthcare solutions like Sword Health, which have historically yielded substantial cost savings for corporate clients. The company is actively enhancing AI integrations within its platform and forging strategic partnerships with industry giants like Goldman Sachs, Microsoft, and IBM to expand its reach. Despite a Q2 2025 revenue decrease, adjusted diluted EPS rose, and recurring revenue remains robust at over 93%. While a significant non-cash goodwill impairment charge impacted net loss, analysts maintain a consensus buy rating, with an average price target suggesting substantial upside. Alight's commitment to AI-driven employee experience and operational efficiency, alongside its dividend, positions it as an intriguing play in the HR tech space. Finally, let's consider Clarivate plc, ticker CLVT, an intelligence solutions provider that's heavily investing in AI. Clarivate is known for its purpose-built AI agents designed to automate complex tasks across its intelligence solutions, integrated into products like the Web of Science platform for researchers. The company is undergoing a strategic transition towards subscription models and aggressive AI integration, aiming for 90% subscription-based revenue by phasing out transactional sales. Clarivate highlighted its renewed focus on Gen AI integration and AI-native solutions at a recent Goldman Sachs conference. Despite a second quarter 2025 net loss attributed to non-cash impairment charges, the company reported positive organic annual contract value growth, particularly in its academia and government segment, and a return to organic growth in intellectual property, driven by AI-related patent filings. With its value creation plan on track and a $500 million share buyback program, Clarivate is transforming its business model to leverage AI, offering a unique opportunity for investors focused on intellectual property and research intelligence. Now, let's take a quick look at the numbers. The data speaks volumes about the diverse risk-reward profiles within these under $5 AI plays. Starting with market capitalization, microcaps like Wolfspeed and Blaze, both under $400 million, to the established giant Wipro at a massive $30 billion. This spectrum illustrates opportunities for both aggressive growth and more stable, albeit still undervalued plays. When we look at revenue, Wipro again leads significantly at $11 billion, followed by TELUS International and Clarivate, both around $3 billion. However, newer entrants like Blaze are still establishing their revenue streams, with their value more tied to future contract fulfillment. Gross margin is where profitability gets really interesting. Agora leads the pack with an impressive 67.01%, followed by Blaze at 40.52% and Clarivate at 36.49%. These numbers suggest strong pricing power or efficient operations. On the flip side, Wolfspeed and TELUS International show negative gross margins, indicating they are in heavy investment or transitional phases. As for profitability per share, Wipro stands out as the only company consistently turning a positive profit with an EPS of $0.13. All other companies, including Wolfspeed, Blaze, Agora, TELUS International, Alight, and Clarivate, are currently reporting negative EPS, signaling that they are either reinvesting heavily for growth, navigating restructuring, or facing operational challenges. Finally, only Wipro and Alight offer a dividend yield, providing some income for investors, while the rest are focused on reinvesting for growth. So these 7 hot AI stocks, under $5, each with a unique role in shaping the future of artificial intelligence. Which of these under $5 AI opportunities are you adding to your watch list and why? Drop your insights and questions in the comments section below. And check out our video right here on 8 best AI stocks to buy, according to hedge funds.